So right here,
thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. So we wicked off of this 706 level of a diagonal pitch fan we've had price in since January of this year, and also a resistance point rejection. We went through this wick as supposed support and are now heading possibly lower down into some potential order block slash support glorified support and resistance levels here. We have a point of control for this range over here on the left from May 2022. So we have some key levels down at 40k. Also a reclamation of the wick after we come up and possibly bearish retest some stuff. Somebody was asking me about going over some ABC structures and what does that mean, but we'll go over that in a bit. But basically, in essence, seeing a C wave that goes down further from a B consolidation slash trap being sprung, something like that. But let's go into the liquidity and see if it justifies the move to the B wave up to this level or not. So what is high block capital? Well, people lock that liquidity into the charts to get burnt to a crisp for not using a stop loss, and we get to see where those crispy characters are. So let's do it now. So coming on into the 1 minute time frame, we had a huge pool of shorts open up shortly after the stream. We called that downside play with the cross down event of the baselines on the 12-hour, but we're jumping the gun here. Let's just look at this. We have the $411 million pool opening up into all of those $20 billion in long liquidity down below.
Fatality.
And that's what happens when you do not pay yourselves. You become the liquidity to the market maker. And they immediately came back up in a V-shaped manner into those breakout traders and came back without hesitation into $406 million pools of shorts, V-shaping into those short pools as well.
Fatality.
And then we came a little bit lower. This in and of itself is a ABC wave. You have this A, B, C, but we didn't really go lower than the B wave. So we are still potentially in a consolidation range to justify moves going lower. So here on the 1 minute time frame, you're seeing some pools of longs open up here to the tune highest of 75 million as we come up into some of these shorts. The shorts are in greater supply here, so they are coming up into these guys to get them to close out in fear. Potentially coming up to a 43,338 target. The band of liquidity up here is thicker, and it's the top of the range of this drop down here, so possibly coming up to that and rejecting off this thick band on the 1 minute time frame. You are imbalanced to the tune of, what does that say, $9 billion. So we came back and we gobbled up basically that 20 billion, and then now we're possibly coming back into some $9 billion. I'm going to put this on the chart because we came back into a pool here. Let's go clean up our Binance chart and put in 43,338. So here we go. Let's go take a look. Binance. So this is where we left it yesterday. We were talking about possibly coming down and pointing at the idea, and just like a lightning bolt, it came down to a pool here that we were looking at within this candle. So we came into that pool, and we're going to put a pool up in here too. It was 43,338, I believe, 43,338. Right in here. So there's a little bit of liquidity up in this region. We just went over what that was on the 1 minute time frame over here. 411 million at that 100x value, 100xer pool that opened up into this V-shaped here, and they are possibly underwater if they're still open. So that could be the draw on liquidity as it comes up here. We'll go into a momentum idea too, and also expand our vision to the higher time frame pools while we're here. So let's go into that higher time frame sauce here on the 7-day. So the 7-day had a little bit of a thicker band to the downside, and they came and gobbled all that up. Oh, still have some more down here at that 39k region that we were talking about on that C leg lower. So whatever we retrace into here could basically just pave the way for more downside. If we expand our vision to the 1 month, let's go see what exists there. So we talked about how when they came to get these $20 billion in shorts, that they do not always clear the range. There are some protected positions that they allow to get paid, and these guys got paid as they came lower here. So do they come back and take out these, put in a higher high, or do they put in a higher low, or sorry, lower high, and then start to make a lower low here? Is this the downturn event? Just to give you a heads up on this week has some major red folders coming soon. We have the CPI data later at New York Open. We have some other PPI the following day. We have some FOMC on Thursday, and yeah, just PMI on Friday. It's just a week of red folders, so beware. That could also be why people are trimming their positions, as they don't want to be caught in that wackiness. And it could do all sorts of fun stuff during the FOMC. Last FOMC was kind of tame, but it could go up to go down, it could go down to go up. It could be a wild rodeo. So, we went over the higher time frame pools a lot. We'll just go over them briefly. I kind of have to get going sooner than later. We do have these sub 34k draws that we could come back down to without hesitation. I would not be surprised. if we start to make a retrace and give all of this back. We do have some down at that 34K range that we could be coming down to on the higher time frame. Just overall more liquidity down below, but don't count Bitcoin out for the count. There is that 63 billion up at 45.2. They could put in a higher high before they do it and scare out the shorts one last time. Let's go ahead and throw on the momentum. Link in the description for more. And you can scroll down to features, see what it looked like at Bitcoin's bottom. This schematic will appear over and over again. You could call it an inverted head and shoulders. You could call it whatever you want, a cup and handle. It has many names, but the key things we look at, the trend cloud, the baselines, the stochastic array. The thing that we were looking at that we had that arrow there pointing to was this cross down event of the 12-hour. We had that for you on Saturday, and sure enough, boom, it played out. Did that play out because of the baseline? Not necessarily. There was multiple factors, being at a bearish order block, glorified resistance level, and also the liquidity drying up, which we go over every day. So also with this inverted cloud play, what did it bounce off the cloud, or was it just an order block of liquidity being aimed at higher? So we broke the super trend on the 12-hour. Let's go ahead and start our descent through the time frames. Let's start with the 3-day, which I believe closes. It closed today. So we have this interesting flash point for the 3-day cross down, possibly cascading here. Ooh, in the next 3 days will be during this event. The FOMC and whatnot will be a very interesting event. Do we get the cross down of the 3-day? The last time we had that for you, and it was documented live, was in July 24th, and sure enough, we bearishly retested and bang to the downside. So those 3-day cross down events, we had a flash point here, and it did not close the candle, so you would have to close a candle with this intact for the cross down to be real. So that is something to note. Coming into all of this news this week could bring with it a massive downside play if the FOMC decides to crash the Bitcoin party. Looking at the 3-day Williams, the Williams %R indicator here is showing a little bit of potential for an alarm cross. When those alarm crosses, just like the cross down event here, it does bring with it some potential pain. We have reset some of the stochastic. The money flow is above the RSI, suggesting a bit of fatigue on the 3-day. All right, coming to the daily. Daily was outside of this price channel and came back into it for safety. It's the stay in your lane play. It likes to stay in its lane. When it comes out of the lane, it likes to come back into it. We're still holding the super trend on the daily time frame. The cloud is still pointing at a bullish 2 o'clock level. We're going to hold off on having this here until it actually starts to make a sign of curvature, still pointing up in that 2 o'clock bullish manner. Pardon me. On the daily time frame here, the money flow and the RSI are at even Steven levels. The Williams is now potentially giving a suppressive move to the downside here with the alarm cross event. Eventually one of these does play out. And yeah, if you go to the 22-hour, as we make our descent through the time frames, we came to the 22-hour cloud, found some support within this liquidity pool to the left, starting to get the Williams potential suppression money flow coming beneath the RSI, suggesting a potential 22-hour push up in line with that idea of coming up to this pool and potentially coming lower. So this is starting to build a narrative as we go through the time frames. The higher time frames tend to suppress the lower time frames, but the lower time frames have to allow themselves to play out within their own right. So you have to look for the fair value gaps and all that fun stuff below and above for where the draw on liquidity could be. On the 12-hour, the 12-hour bounced off the cloud but broke the super trend. You have this purple vector candle showing stopping volume, and yeah, getting the Williams to open up here to potentially suppress the 12-hour if this picks up on momentum. Overall oversold on the 12-hour stochastic. If we go to the 6-hour here, 6-hour getting suppressed by the Williams. This is kind of what you would see on the higher time frame if the Williams picks up steam and suppresses. This is what happens to the stochastic. It just goes sideways and cannot take off as it gets suppressed. We had bearish divergence on the money flow here alongside the cross down event of the 6-hour and the 12, which was why we were ultimately calling for downside. And as it stands right now, you have this fair value gap up in here that it could come back to based on the liquidity here we were talking about. They could come back to this position, stop out some of the shorts. As it stands right now, the shorts are being paid handsomely, and there is more of them up in these candles, some at 42.878. So it could even come to that 42.878 level here. So there's two potential zones, if you will, where it could fatigue off of. And yeah, going to the lower time frame of the 4-hour. 4-hour had 3 red vectors to the downside, getting the leading MACD, everything going into oversold status. Williams could still come down in a manner, even though you are bouncing off of the adaptive here. See, the reason I use these oscillators and these smart money concepts is because a lot of times these line up hypothetically with your deviations of the pools they induce up here. So, you know, which came first, the chicken or the egg? Which came first, the moving average or the liquidity? Maybe the liquidity draws down to here because that's where their stop loss mathematically gets hit. And that also happens to coincide with the adaptive because that's where we back tested it too, you know? So there is something to be said for mathematical formulas that play out time and time again. All right, so the 4-hour getting the money flow beneath the RSI here, suggesting that you could get a push on the 4-hour time frame up to the zone. It's in line with the narrative we're talking about. Coming to the hourly, let's make these a little bit smaller. Hourly time frame getting overbought. You had some previous bullish divergence on the RSI that started to play out here on the hourly, but you have not come back above anything significant. You have not broken the bearish super trend or the cloud, so ultimately bearish in tonality. So what can we do about making a projection here? Well, if you take a what's it called, Fibonacci from this range and take a look here, this lines up with a golden pocket region coming into this 618 / institutional level 706 6665 region. So this could come back into a 618 rejection zone if you are so inclined. If we want to take this entire thing down to here, which I could technically do, but not really going to change much, so we'll just leave it at the first impulse. So this 43K K region could be a draw and see some flashpoint rejection zone here, and this would be your ABC pattern. So you have like your first A wave consolidating B down into a region down here, perhaps. So you got these deviation regions down in here, some support and candles over there. And ultimately, this is what a ABC is like. It creates these B consolidation pattern traps and then rips it in continuation direction, which in this case is to the downside. Doesn't matter which side it does the same thing every time. As it stands right now, we have yet to reclaim this wick, which is very common, and then now this angle of this cloud in line with the liquidity here. It would have to see some acceleration through this hourly cloud here, which is mighty thick, for it to make an impact to come up to this region anytime soon. Here, I'm going to just move this. This is 886. We're going to put that on pause for a second and go look at the broader markets and see if that puts things in perspective, starting with Dixie. So Dixie, we were looking at down here with a rocket ship that took off to here. We were looking for a rejection off the 706 region because we're ultimately in a bearish trend. We had a nuke that played out here down to the rocket ship. Now we're getting a nuke over here. So the fatigue is real on the dollar. We were talking about a potential, this could be a double top scenario and coming possibly lower to recover this wick down here. Wait, I don't want to do that. I want to put a green one. All right, so that is the Dixie for now. We will come back. It is overbought on multiple time frames. This is why I don't need to analyze the higher time frames, because within the stochastic array, it is 7 time frames of information, considering over 32 different values to catch those market reversals. So I don't really need to go to the higher time frame if I am pressed for time. But yeah, the daily most likely would be overbought, and so would some other stuff below that, similar to BTC. But it looks like we are getting some potential of a double top scenario and coming down to recover this wick. Let's go look at another sector. Let's look at gold. Gold broke the golden pocket region, did not come up to the target. We're seeing a switching of sectors. Does that mean oil is so we're getting a bit of a deeper retrace here, so we're going to put this in the deep category now. And let's go take a look at oil, crude oil. Let's see what for my man. Whoops. Oil getting a little bit of a bounce from that region we were talking about. There was some rocket ships we were talking about. Ultimately, even if this gets recovered on this fair value gap on the 4 hour, you do have some higher time frame narratives calling for possibly sweeping in this wick region. Ultimately, as we enter winter, there will be less people going out. Granted, they use oil for their cars and whatnot. We've seen 1, 2, 3, 4, 5, 6, 7 weeks of downside. So seeing a little bit of a dead cat bounce slash idea off the 786 here of oil as this baseline suppresses the price. And this is why the baselines are mighty powerful tools to just insinuate when fatigue is inbound on the momentum. All right, so oil possibly getting that bounce for the weekly, coming to NQ. So we were looking at NQ. We made some nice gains yesterday. We were looking at a sweeping of this wick over here. There was some daily draw here we were looking at over here. There was kind of a BPR fair value gap on the daily, which we were looking to requite as a fake out to the people short. And now we are getting a nuke on that. We still have the contract rollover gap here at 16K that we could basically come back to. We could come up to a deviation level, put in some higher high or something. We could just delete this right now. I think we played out that scenario. We'll just go with the deviation level. So basically you could come up into some of these wicks still, putting in some highs for the range over here. We're going to put a wick level over there, possibly at 655. So we're attempting to take out the highs here, but coming back into some of the liquidity down below on NQ. Yesterday we were watching this come up here in a manner. Took some easy plays here and there. For the Discord, we had some nice little delta slingshots off of here. Took this down for some, and also this one and a few others. Took this to the upside, took this short earlier on too. Few plays on NQ. So we're still seeing this bullishness continue, no end in sight, as the dollar possibly gives risk on assets a little bit of a continuation. And so people might be seeing this bearishness coming over the markets, and then that just gives them permission to rip. So they could come back down a little bit and then just rip higher into the deviation levels for the higher targets here. We basically took out some levels, and we have some higher wicks to attain up here, which we have not yet swept. So we could just keep drifting higher. This nice play off the 786 yesterday was quite a fancy opening. All right, so we got a bigger sense of the broader markets. Now Bitcoin dominance is taking a tumble, actually. So we're going to take a look at that. Bitcoin dominance taking a tumble as we go into a deeper retrace area. So we were looking at this coming out of here, off the cloud here, and coming up for the Bitcoin's dominant surge, came to a level. Now we're coming back into a local impulse region at the 786. We have ultimately rejected the 12-hour cloud though, so if we come down here and surge back up, we could come back down lower on the dominance. If we go to the USDT dominance, we were looking at a flashpoint for people to get kicked out into their trades. Where was that flashpoint? Well, we had a rocket ship telling us that we were fatigued on a 6-hour time frame, telling us that we could potentially knock people into USDT. So there was multiple factors. We had this ABC for you here from the nuke up here coming on down to the rocket. We had a false takeoff of a rocket here, which was a B wave, trash consolidation B wave, which is a trap that leads to a C, and then now we could possibly be seeing our way out of this as it retraces. And if this continues to be bullish in a manner here, that means people get knocked into USDT some more. So looking at how this 4-hour cloud reacts off of the retrace here on USDT dominance is going to be interesting to note. So we were watching this here. This was where we were streaming right around here yesterday, and we were saying, watch how this cloud reacts. Enough said. So it reacted off the cloud and bang to the upside. If you get candles closing above the cloud, that's when you see that beautiful reaction. We're here for it every single day, and possibly this higher time frame, you broke the structure here, you broke the super trend, this played out. So now what? Do we retrace back down and find some V-shape? This coincides with the idea of Bitcoin getting a bit of a rise as it retraces down here. If it comes down to this cloud here, what is the reaction off of this cloud? Coming down to here and bouncing back up would insinuate that Bitcoin gets to this region and possibly rejects. So this is lining up with the narrative now, you see. So we're getting the USDT dominance going down, meaning people putting it into trades again. This curvature insinuating that the larger play off the cloud could be to the upside off of this golden pocket region. So watching for a reaction there would be something to note. The 4-hour is coming down here, but the money flow is beneath the RSI, suggesting that USDT dominance could continue higher, meaning more people get kicked out. The rocket ship also insinuating a market structure shift coming. You got bullish divergence on the 6-hour also starting to cascade into the MACD, the money flow beneath the RSI, suggesting you could continue higher. So this lines up quite nicely with the narrative we're painting here. So we'll watch how this cloud is handling itself. We have the 6-hour cloud also possibly curving here, so we'll watch how this 6-hour reacts. And that's it. That's sometimes it's harder to read than the others. Today seems like it will be easier to read as it drifts up into this pool. We have time to look at one coin or take one question, and then we got to get going, unfortunately. Hey, what's up, Lee? Glad you can make it. Anybody have anything they want to look at? So yeah, basically targeting these fair value gaps, looking at the reaction at what happens at them, but I have no interest in this range. I'm interested at the volatility range, not the chop range where you're staring at your trade, losing mental capital. Mental capital is a thing, so preserving your mental capital in a trade and waiting for those higher probability setups and zones and confluence alongside the liquidity is key. It's basically 3 pillars: the math, the liquidity, the math, the momentum. So the momentum fatiguing gives you the insinuation of higher probability, and then it's not just on one time frame, you have to line it up. Multiple time frame concepts. And so this cross down event of the 12 with the 6. So we had the 12-hour cross down event here. We weren't trying to short this, no thank you. But looking at how all of this coincides, you get the 6-hour here, and then you had the 4-hour as well. So you had all of these fatigue points starting to cascade throughout time itself and leading to this event. And that's what the baselines are about. They're your first sign of reversal. And then now it's starting to flash on the daily. You see the daily now getting a cross down too. Cross down here. And then it starts to cascade to the 3-day. And so basically you're going to get this, it's getting too many arrows, but basically this 3-day over here, we talked about possibly closing in the next 3 days with that cross down event. So we'll see how that goes. All right, so we can look at something. We were also looking, I believe, at Matic taking a tumble. So just to be clear, we were saying it would come down to this region. And a proper thing with the nukes would be to wait for a retest to the 236. And what do you know? It came to the 236. Coincidence? No. Time tested over and over again. And we even said it would come up to this wick first. Look at this. Look at this. We said it would come up here and then drop. And then boom. Can't make it up. But it's in the past, so moving forward, what would you like to see? Oh, this is it, haha. Does the current structure seem to imply further downside? Cheers. If you haven't already covered what we discussed, that'd be good to cover. So yeah, basically what I do is I go through the entire time frame, going through the different time frames. So what I was doing with BTC was sculpting a narrative for why it would go lower, not just based on one time frame, but all the time frames, starting from the 3-day on down, and then looking at where it could go based off of momentum and the liquidity and whatnot. So we basically have come into a range here, and this range is bearish order block, whatever you want to call it. Point of control is down below here at that C wave level. So coming down to that point of control in this range would make sense in that framework. So coming down into that liquidity after coming into that is how you sculpt it. And then the ABC idea is there are some trap traders up here. So there's people that were hoping for like 48K or whatever here. They trapped them, they liquidated most of them, but some are still open. And maybe they dollar cost average and they tried to add to their position, and then they stop out some of those people, and then they come higher, never to let them see their entry, see the light of day again. And then they come further down into the longs. So they tried to scare out the shorts and induce the longs and then rip it into the longs. It's a win-win for the market maker. This ABC structure of it coming up and coming back down, the continuation, and this is the higher probability setup if it does reject off of here. So I would hold tight and watch for the reaction, and then even in a lower time frame, you're going to see, similar to that image I was sharing, you're going to see on a lower time frame 3 hits like this. I'm going to make this smaller. So here we go. And 888. Let's just leave it at 888. Okay, so within this structure, you're going to come up here, and you're going to come up and you'll do even the 3 hits here. It'll do something like this, like a little micro shift in here, and then you wait for this kind of 3 hits to the high idea. 1, 2, 3, and then you could wait. Bitcoin likes a 4th. You could even do that as an even higher confirmation. So you don't want to necessarily set limit orders, although if you could, but you have to have your exit strategy in mind. Where is it invalidated? Where would my trade be invalid? And then you put your last line of defense, and you say if it goes above here, we're ultimately breaking the range and we're bullish. So you could say your stop could be in that region, feasibly speaking. and then you do a target, put it a little bit above that, and then you target below, and maybe trim at a certain ratio, you know, or whatever, you know. This is just me streaming and consciousness. I'm not giving signals, just saying what you would do once it gets here, not just immediately hop in because it's at a level, but you have to monitor, similar to how we monitored this over time and watched it fade, and we were watching this fade into this. It would fade in here too. All right, so let's see. Nice, cool, thanks, glad you got it. Well, in that case, ladies and gents, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bring in the fire, the accuracy, the precision, all that fun stuff, and we'll catch you on